Dig. All right. Yeah, stepping away just from the wrestle just a little bit. I want to hook up for my one of my subscribers on YouTube, Digger Norway. He popped up in an old podcast I did from June 14th. That brings me back all the way here. And I had an analysis on K92 Mining. And I'm just going to revisit it, see how that panned out. And look at that. Monthly candle chart, where are we now? In June, we were this candle here. On the weekly, we're probably going to have a nice consolidation pattern right here. 12-month moving average is inclining with that close, but you have that wick. So monthly defined, resistance right there, starting to be defined, running into previous resistance. So the first time you hit it, the sellers coming in, bring it back down, and then you got a new close. The next month, bring it back down, a new close below, up, back down, new close, back down. And right now, as time moves on, this becomes, so the closer the breakout, the closer the pattern to the breakout line, this is the most valid one. And you're starting to dissipate that far away resistance. It's still there, so when you create a bigger pattern, but I trust most of these closer patterns, closer breakout lines. And I like this lower highs where the width contracting, tightening up, and then bam, exploded right here. So June 14th, a little bit early, so it was embryonic. And 1, 2, 3, 4, 5 months, really get your patience out. Gap down below 12-month moving average, and then you say, oh my God, what a fail. After that, just breakout. So then you got this candle here, which breaks out above this monthly defined breakout, the higher pattern monthly defined breakout. And now we're hitting some more bigger pattern, close above, another breakout, going away. And now we're getting further and further away from that 12-month moving average. Not a super big fan of that. So now that's when we could expect maybe a pullback. This one, where is my distance away from 12-month moving average? And we're going further and further away. So here, usually the good spots, when you get pullbacks up and get pullbacks close, and then you start touching it, then you go on the weekly, you look for resistance turn support, you look at the bouncing off an inclining 30-week moving average. And so if everything is still bullish and the wave of evidence is still good, these are the best opportunities. Right here, danger zone, because you could expect a pullback eventually and then a bounce off. So you're going to look for that again. Just like that, so far away, scary, 160%, more than 160% away from that 12-month moving average. That's huge. And what happened? Brought back down to reality, downtrend. And after that, when you crossed over, then we started behaving properly. You want it to always stay over, but you don't want it to go far, far away. And you don't want to get in when it's too far away from the 12-month moving average. So that's how it panned out, guys. Here would be a bigger pattern. So always chart morphs, creating bigger and bigger patterns. Not a lot of data. So if you come up here, break down, touch, 12-month average keeps going up. Previous resistance becomes support. Previous resistance becomes support. That's how it moves up. And as long as you're above a 12-month moving average, then we could be creating a bigger base. Not quite there yet. Right now, we're just coming out of this bottom base right here. So this is my target, my greedy target, added to the breakout line of previous month right here. This one, close above, and giving us a target, getting closer, bring us closer to this all-time highs, this monthly defined resistance right here. So remember, we're on the higher trend because we want to establish trend. You don't want to go against it, so we're not going to short this. We're going to wait for pullbacks and on contracting volume and then play them as it goes back up. So let's zoom in, do some classic Stan Weinstein stage analysis. Whoa! Why do I have two Ichimoku clouds? That is funny. All right. Look at that. Green, remember, above an inclining 30-week moving average, outperforming the SPX. So had some good spots right here off that base, embryonic breakout, of getting out of the Ichimoku cloud. Right here, great volume. And remember, look at the volume, and most of the time, you're probably going to see some type of important pattern exploding out of base. And right here you had it. Look at that volume, more than twice the average of the previous 4 weeks. It's just perfect stand. But you don't have the total weight of evidence with you. You still have to go through that Ichimoku cloud, see how it's bringing the price action back down. Do we have another breakout here? Still not above out of the Ichimoku cloud. June 14th, that was right about here. So it wasn't quite there yet. We're still not, we didn't have that close above that monthly defined breakout line. Price action came back down, hogged that 30-week moving average, and actually dipped below. So this is kind of scary, but on contracting volume, not huge red volume. So that's where you get that gray zone right here, still outperforming the SPX. So that stage, embryonic stage 2, right here. Then another one here, still embryonic. You got the weight of evidence is starting to get there, but it's not totally there because of the higher trend. You weren't through that monthly defined resistance yet. Am I saying anything? I should go back. You're above. No, you're not. That June, that candle, see, you're not above. You're above monthly defined resistance here of the small pattern, but not even of this more important pattern right here, that 95 cents handle. Okay, let's go back. And time moves on, but you're still building, except for this little spot here. You're back in. And now you got, oh, look at this green volume right here. And above monthly defined support or resistance, monthly defined resistance here. So a lot of these levels you're just blasting through above weekly defined resistance, and even closer by. All these levels are just blasting through on more than twice the average volume of the previous 4 weeks. So that's a bona fide stage 2 breakout. Like Stan says, 40-50% move before you even go in. Really make sure you iron out all those weak hands, people that aren't holding forever, that are going to get triggered out, that get bored, that lose patience, that don't have the profits right now, turn attention. All these guys move out. It tried here. There's still some of that action happening. It needed more time, so consolidation, almost a stage 2 continuation breakout, but the real breakout's right here. So after this calm, explode, and then you're out. And then every time you went up, contracting volume on those down days, exploding volume on those green days. That's just a beautiful stage 2 breakout. No more overhead resistance. Starting to create underhand, under support, Ichimoku cloud, and you're out of that mischief of all this resistance, all these resistance levels. You're out right there. But you're starting to get further and further away from that 30-week average and that 12-month average. Right here, beautiful consolidation. Even here would have been a nice breakout. Could have bought here half position, or even here as you started getting closer to 30-week average, you could have taken one. But now we're far away, guys. It's very hard to enter. If you're already in, and if this doesn't pull back, then you could go reach that swing rule, or you could wait until you reach that monthly defined resistance. But if you want to position yourself in new trade, you're too far away. You're getting far away from that 30-week moving average, distance away from 30-week average. Look at that. 60%, very far away. So you'd have to wait for a pullback if you want a safe, low risk environment to enter. Either if this support holds right here, if it sinks through, you have this support here, You have the 30-week moving average wherever it is, and this would be the good zone right here. So as this pulls down, when it starts going back up, wherever it is, that's the zone where you could enter a position here. But from right here, that's a higher risk environment. You're just going to suffer. If it goes down, after that, you're already starting negative. But if you enter here with these support protecting you, 30-week average protecting you, if it goes against you and dips back down below, it just wasn't meant to be. Your timing's off. Good stage 2 should be hovering just above the 30-week average, but not touching it, not going below it, not challenging that. You should be sleeping at night like a baby. So that's what I'm looking for. But definite stage 2, guys. So let's see where it bounces off. If it bounces off these levels, if it comes back down, and how we could form that bigger pattern, creating that further away target, and if it builds off that. So Digger Norway, I hope you enjoyed this one, and don't hesitate to beat me if you need anything else, guys. All right, see ya. Thanks, guys.